Now, TD has announced that they will be introducing a collateral-based mortgage. How will this affect mortgage brokers?
Well, it depends on how the mortgage broker looks at it. Okay, you know, everyone's going to have a different opinion of what direction it takes. I think at this particular point in time, I think the TD Collateral Mortgage can be a very great option for clients. I think you know, the reason it's a good option for clients, it is going to allow clients that are qualified to refinance their home, to take more equity out of their home, and to do it without any legal expenses, just working with a branch. So I think so long as TD has a policy in place, which they do at this time, where the broker is still in contact with that client, if the broker is helping out that client, that it's a win-win for everybody. It's a win for TD Bank, it's a win for the client, and it's a win for the broker for helping that. And I think in maintaining that part of it. So I don't see any disadvantage at this point in time. I think obviously if there's a policy change within TD Bank on how they're facilitating this product, I think then it could be detrimental to brokers. But overall, I think what's happening is that brokers have to understand that, you know, client is only as good as you take care of that client. It's only your client as good as you take care of it. If you're not going to service that client, you're not going to be a value-added service, and that client doesn't see value in you and your company, they're going to go elsewhere anyways. So I don't think it's a thing on TD Bank. I think if TD Bank, if anything, the collateral mortgage can be something that can be very helpful to brokers.
And is there anything that a consumer should be aware of prior to signing up for this type of product?
Absolutely. The consumer should be aware of, number one, this product is not transferable to any financial other institution. So if you dislike TD and you have a dispute with them, you can't automatically go over to Royal Bank and they're going to assume everything for you. So it does have to require, anytime you make a change on it to a different financial institution, or if you sell a property or anything of that nature, the mortgage has to be rewritten and it has to be requalified again. So it only applies to this one particular property. So the disadvantage to the consumer, it's only good for this property, essentially. If you're going to go to any other property, you're going to have to take out a brand new mortgage and you're going to have to incur new legal expenses to do that.
Thank you very much, Jared.
You're welcome.